Welcome back to the Deep Dive. Today, we're taking a closer look at Shakti Pumps, India Limited. Some big announcements recently. Our sources, just so you know, are the official corporate filings, the ones they submit to the Indian stock exchanges, the NSE and BSE.
Right, specifically that board meeting outcome from August 1st, 2025.
Exactly, and the limited review report that came with it from Pricewaterhouse for the quarter ending June 30th.
The first quarter of the financial year 26.
Right. And our goal here is, well, to cut through all the formal corporate jargon and really pull out the important stuff for you, the key decisions, what the financials look like.
And I get the real story behind the filings.
Yeah, let's unpack this. So first up, that board meeting you mentioned, held Friday, August 1st, 2025, all via video conferencing.
Yeah.
What struck me immediately was how quick it was. Started at 5:30 p.m., finished by 6:05 p.m.
Yeah, that's pretty fast. 35 minutes.
Especially for some of the items on the agenda, does that speed tell us anything? Is it efficient or maybe rushed?
Well, it often points towards efficiency, actually. When you see significant items decided that quickly, it usually suggests a very well-prepared board. They likely had clear agendas, objectives were set, maybe even some pre-meeting consensus building.
Okay, so not necessarily rushing through a thing.
No, more likely strong governance, focus on execution. These meetings, even short ones, are critical moments. That's where the financial direction gets formally stamped.
Right. And the very first thing on that packed agenda. Approving the financial results. The unaudited, consolidated, and standalone financial results for the quarter ended June 30th, 2025. Plus that limited review report from the auditors we mentioned.
And maybe we should quickly clarify unaudited and limited review for you. Unaudited means these numbers haven't gone through the full deep audit they do at the end of the financial year.
Okay.
But a limited review by a firm like Pricewaterhouse, that's still a proper check. It's a thorough look, provides a good level of external assurance on the figures, even if it's not the exhaustive annual one.
Got it. A crucial check, but not the final word, like a full audit. So with that context, let's peer into those results. What did Pricewaterhouse actually find for that June quarter? Their review, the consolidated one, it covered the main company, the Uganda branch, and 5 subsidiaries.
Shakti Energy Solutions, Shakti EV Mobility, Shakti Pumps FZE in the UAE, the US one LLC, and Bangladesh. Quite a spread.
It is, and the big headline from the auditors.
They issued an unmodified conclusion.
Okay, what does that mean in plain English?
It's good news. It basically means they found the financial statements were prepared in all important ways according to the rules. So Indian accounting standards, generally accepted accounting principles, it gives you a strong signal of reliability for those numbers.
Right, so the numbers look properly put together according to the standard.
Exactly. Doesn't necessarily comment on, say, the quality of the business performance itself, but the reporting is sound.
That's a key distinction. Okay, so let's get into the actual performance numbers they reviewed. How did the different parts do? Let's start with that Uganda branch. It reported revenues of 22.34 crores.
And 1 crore is 10 million rupees, so about, what, $2.6 million USD roughly for our international listeners?
Right. But interestingly, it showed a loss after tax, 0.58 crores.
Yeah, that loss in Uganda is worth noting, even if it's small overall. Could be it's an early stage investment, still finding its feet. Or maybe just tough market conditions there right now.
Shows the risks of global expansion.
It does. Different markets, different stages.
Then there were 2 other subsidiaries. They weren't named specifically in this part of the report, but together they brought in Rs 53.76 crores in revenue and turned a profit after tax of Rs 2.39 crores. So positive there. And then 2 more subsidiaries, these ones incorporated outside India. They contributed Rs 31.00 crores in revenue and a profit after tax of Rs 3.1 crores. Also profitable.
So you see this mix, right? Some parts doing well, others like Uganda maybe still developing or facing headwinds. It's quite fascinating, this granularity. Shows the diversity in their operations, their global footprint.
Different engines running at different speeds.
Exactly. Oh, and there was one tiny subsidiary, not reviewed by the auditors, minimal impact, like 0.13 crores revenue, tiny loss, deemed not material. Which makes sense.
Okay, so that's the financial snapshot. But the board didn't just look backwards. They also set out some big future plans, which I think are just as interesting, maybe more so.
Often the forward-looking stuff tells you more.
Absolutely. Like they've set the date for the 30th Annual General Meeting, the AGM. It's going to be Thursday, September 25th, 2025 at 11:30 a.m. virtual again via video conference.
And the AGM, that's really key for shareholders, isn't it? It's where they get their say, where they can endorse or, question the board's direction.
It's where these board decisions often need that final stamp of approval from the owners.
Precisely. Give shareholders a voice.
And one thing potentially up for approval is a dividend. They've set the record date.
Yeah.
That's who gets the dividend. If it's approved, it's Thursday, September 18th, 2025. This is for the financial year that ended back in March 2025.
Right, looking back at the last full year.
And if the AGM approves it, payment happens within 30 days. Standard practice.
Good for income-focused investors to watch.
And then there's leadership. Looks like continuity is a theme. Mr. Sunil Patidar is up for reappointment as a whole-time director for another 5 years.
Starting January 2026.
Yeah, subject to shareholder approval at the AGM, of course.
Yeah.
The filing notes he has over 30 years of experience. Manufacturing, selling stainless steel pumps, deep industry knowledge.
Well, that kind of experience, especially consistent leadership, is invaluable, navigating different cycles.
And it mentions he's the brother of the chairman, Mr. Dinesh Patidar.
Ah, okay. Interesting dynamic. Often means, a very aligned, long-term view, deep roots in the business.
And on the external side, a new appointment. is MP Taraki and Associates. They've been appointed as the cost auditor for the next financial year, 2025-26.
Cost auditor, so focusing specifically on the cost structures and efficiency.
Seems like it. The firm apparently has a lot of experience, senior partner with 27 years in cost and management consultancy. Okay, now for what I thought were the really, really big items, the financial authorizations.
What did they approve?
Get this. The board approved the power to borrow funds up to 3,000 crores.
Wow, 3,000 crores.
Yeah, 30 billion rupees. That's roughly, what, 360 million US dollars?
That is significant. A very large number for them.
Huge. And alongside that, they approved the power to create a charge, basically security, on the company's assets for those borrowings, also up to 3,000 crores.
Securing the debt. Standard, but again, the scale is notable.
And both of these, crucially, need shareholder approval at the AGM.
Of course. But wow, this raises a big question, doesn't it? What does this huge borrowing capacity signal? It's not just for day-to-day operations.
No way. Seems like major plans brewing.
Absolutely. It could mean significant expansion, big capital investments, maybe even acquisitions. It's a very forward-looking move. Suggests real ambition for something big down the line, maybe scaling up those EV mobility plans or pushing much harder internationally.
And speaking of ambition, or maybe reward for leadership, there's a pretty notable change in executive pay proposed.
Oh, who's involved?
The chairman cum whole-time director, Mr. Dinesh Patidar. The board approved revising his remuneration from 9 crores per year up to 18 crores per year.
Doubling it from 9 to 18 crores per annum, that's quite a jump.
It is. The company's note explicitly says his pay hasn't increased for the last 4 years. And they say this revision is to, quote, appropriately reflect his continued leadership and contributions.
Okay, so they're providing a justification. 4 years without a raise, and now a significant adjustment.
Still, doubling is significant. And this also needs AGM approval. Right.
Yes, absolutely critical. Shareholder approval is essential here. It allows the owners to weigh in, decide if this aligns with performance, with market benchmarks, and with their interests. It could be tied to delivering on those big strategic initiatives that the borrowing power hints at. An incentive, perhaps.
Could be. A reward for past work and maybe an incentive for the future push suggested by that 3,000 crore authorization. So quite a lot packed into that short board meeting. We've walked through the quarterly results, the auditor's view, leadership continuity, and these, potentially game-changing financial authorizations and pay changes.
It paints a picture of a company potentially gearing up for a major new phase. Which brings us to a final thought, really, for you, our listener, to mull over. Given this approval to potentially borrow up to 3,000 crores and that significant hike in the chairman's pay, what specific strategic moves, what market expansions do you think Shakti Pumps might actually be preparing for? How could these potentially alter its position, its whole standing in the industry moving forward? Are we talking a fundamental shift?
That's the big question, isn't it? Definitely something to keep an eye on as things develop. We encourage you to keep exploring and observing how these plans unfold. Thanks for diving deep with us today.